This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. OPEC Plus is unlikely to tweak its current oil output policy when a panel meets on Wednesday, OPEC Plus sources told Reuters, as Saudi Arabia and Russia said they would keep voluntary supply cuts in place to support the market. Ministers from the OPEC and allies led by Russia, known as OPEC Plus, meet online at 1100 GMT. The panel, named the Joint Ministerial Monitoring Committee, can call for a full OPEC Plus meeting if warranted. Oil has jumped towards $100 a barrel for Brent crude, the highest since 2022, as tighter supply due partly to OPEC Plus output cuts and rising demand outweigh concern about stubborn inflation and weaker economic growth.
Oil fell on Wednesday, as pledges by Saudi Arabia and Russia to continue crude output cuts to the end of 2023 were offset by demand fears stemming from macroeconomic headwinds. Brent crude oil futures were down $1.58, or 1.74%, to $89.34 a barrel at 10:45 GMT, while U.S. West Texas Intermediate crude, WTI, fell $1.60, or 1.79%, to $87.63 per barrel. Oil prices remain under pressure from demand fears driven by macroeconomic headwinds.
Moving on to the top news in the energy sector.
The Russian government is ready to ease a ban on diesel exports in coming days, the Daily Kommersant reported on Wednesday, citing unidentified sources. Separately, TASS news agency cited Energy Minister Nikolai Shulganov as saying that the government, at all levels, had been discussing partial permission for fuel exports. He said further decisions on fuel market regulation would be published in the near future. Despite being one of the world's top oil producers, Russia has suffered shortages of gasoline and diesel in recent months as high export prices made it advantageous for refiners to sell their products abroad.
The European Parliament's Environment Committee backed former Dutch Foreign Minister Wopke Hoekstra to be the EU's next head of climate change policy on Wednesday after lawmakers won extra promises from him to strengthen green measures. Hoekstra and Maro Sefcovic, who is the nominee to lead overall coordination of European Union green policies, both secured approval from at least two-thirds of the committee. Committee Chair Pascal Canfin said lawmakers had sought a clear commitment to keep on delivering on the Green Deal, referring to Europe's overall climate and environment policies.
Next, we have the top news in metal markets.
The surplus in the global nickel market is expected to widen to 239,000 metric tons in 2024 from 223,000 tons this year, the International Nickel Study Group, INSG, said on Tuesday, signaling further pressure on the metal. Prices for nickel on the London Metal Exchange are down 38% so far this year. High-grade, Class 1-inch nickel can be delivered against the LME contract, while production of lower-grade, Class 2 inches is soaring in Indonesia. Historically, market surpluses have been linked to LME deliverable, Class 1 nickel, but in 2023 and 2024 the surplus will be mainly related to Class 2 and nickel chemicals, the INSG said.
Copper prices slumped to their lowest in more than 4 months on Wednesday on concern about global growth after bond yields surged on views that interest rates will have to stay high to dampen inflation. 3-month copper on the London Metal Exchange, LME, was little changed at $8,004 a metric ton by 1005 GMT after dropping to $7,924.50, its lowest since May 25. Copper and other metals recovered after the dollar index equals USD weakened, making commodities priced in the U.S. currency less expensive for buyers using other currencies. We will now look at the top news in the agricultural sector. Ukraine's Navy said on Wednesday that 12 more cargo vessels were ready to enter a fledgling Black Sea shipping corridor on their way to Ukrainian ports, as Kyiv steps up a push to defy a de facto Russian blockade on its vital sea exports. Russia, which has a much more powerful and bigger naval fleet in the Black Sea, pulled out of a deal in July that had allowed wartime Ukraine to safely ship food products out through what is traditionally its main export corridor. Ukraine responded by setting up a temporary, humanitarian corridor for cargo vessels, and several ships have departed from Ukraine's Black Sea ports since.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.